Hi everyone, welcome to Share and Review. So we're back on track after having a week off, which has been great. Today I'm going to take a look at Chorus and see the performance of that. Just remember that what I'm doing here is for educational purposes only, and it's sharing with you how I analyse a share when I'm looking to make a purchase to even see whether it's worth consideration. It's certainly not intended to be personal financial advice or anything like that. You obviously do need to go and talk to your own advisor. I do, however, offer a share trading signal service. Again, this is based on my methodology, and it's hopefully created so that it can cut down the noise as to what is available out there within the New Zealand market. So you're welcome to come along and join that. 30 days free trial to see what you think, where I send out signals every week, usually on a Monday. So anyway, let's jump across and have a look. Right, so I have got Chorus up here on the screen, and from face value, hey, it's looking like a fairly strong performer, which is great. We did see the market sell off ever so slightly for the last week. Now that is not uncommon, because as you can see, the week before, that was the 8th of September, there was a dividend announcement, okay, and it looks like it was announced actually on the 13th. So it's not uncommon for a share, when it goes ex-dividend, for it to fall in price. And normally you've got to, as a rule of thumb, allow about 1.5 times whatever the dividend is. So for example, pick a figure, if it's a 50-cent dividend, then you've got to allow 1.5 times that. So in other words, you've got to allow at least 75 cent potential drop in the value of that share. So what I'm getting at there is you've just got to make sure, if you're using stop losses, that you have given your share room to move, or you know exactly where your exit point is going to be. So that's not uncommon. So just looking at this is over a 2-year period. It's certainly looking like a very strong performer. Let's have a quick look over the 5 years and just see. Definitely, it's definitely at its all-time highs, which is certainly a good indicator that I would want to see for a share. We'll just take it back to the 2 years. Now I'm just going to put my indicators on that we use all the time, which is a 30 exponential moving average, and also the 15. Right, you can see here that on the weekly chart, the 15-week moving average crossed through the 30-week back at the end of July, and that's a really good sign. The share is trading above both the moving averages. Again, great indicator. We'll just pop that onto a daily chart just to reconfirm. Okay, daily charts showing there could be a potential sell-off here. Nothing to get concerned about, because like I said at the beginning, it has paid a dividend. And for those that are unsure what a dividend is, that's where the companies will pay a certain percentage of their profits back out to shareholders as dividends, okay? So again, I would just keep an eye on that. It has gapped a little bit on the daily. Nothing to get too concerned about at this stage, but it is something that we would want to keep in mind. I basically base all of my information on the weekly. I just like to have a quick look at the daily charts, just in case there's something happening there that could potentially throw a little curveball in. Now, before I run the New Zealand stock market over this year, we'll just move down here. I've got the average true range, or the ATR, and I set it at a 21 period, so in this case it's weeks, and you can see here that we've got a huge spike, which means that the volatility in this share, or the potential movement in this share, has jumped up. So it's gone to potentially around 35 cents in a day, or a week, sorry, because we're in the week, whereas it was trading at around that sort of 27, 28 cent mark. So it's really spiked up. So that's something to just keep in mind. It's not an absolute red flag, but it just, to me, means that I need to keep my stops a little bit wider, because there could potentially be a lot more movement in this particular share. The MACD, again, I don't put a lot of weight on that. I just like to see that it's trending up, which it is, and the volume is also trending up, which is a good sign on here. Although when we look at the main chart there, it doesn't appear to be a lot of volume, just over that million mark, which is fine. Right, I'll take these moving averages off and we will do a quick comparison with the main board of the New Zealand Stock Exchange. And again, another great indicator. It is trading above the main board, which is something that I want to see. The little caveat I'm going to put on this is, for me, I want to make sure that it has been trading above the main board for at least the last 5 weeks. So you can see here for the last 3 weeks it has been, so that's great. When we hit the 4th week, that was when it broke through, which is great. But for me, I want to see at least 5 solid weeks where it's cleared that line of the main board of the New Zealand Stock Exchange. Prior to that, it was trading with it, but just ever so slightly under. So I want to see 5 clear weeks, a little bit like what we can see here at the start of this chart. You can see here September 2022, it was trading well above. So we had a good series there of at least 5 weeks that the stock was trading above the NZSX 50. Let's pop it on a 5-year one, and you can really see that for most of the period it has been, but obviously it just did slip down. It's obviously distorted it a little bit. So we'll go back to the 2 years. So that is really all I've got to say about Chorus. I hope that's helped. Like I say, I'd love you to come and join me and just take a look at my share trading signals and see if it's going to work for you. They're certainly not set in stone, but they're just there to help you cut down the noise as to perhaps your own share selection process. So we'll catch you next week.